You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hi, I'm Tom Cock. Do recent market declines have your knees knocking a bit? Do they have your emotions frayed? Are you tuning in to CNBC every few minutes just to check to see what's happening today? Well, you know you shouldn't do the latter. And the former, well, that's something we try to help you with, but we can't really fix. But what should you do? Here we are, the last trading day in February, and markets have roiled this week, have they not? Thousands of points in declines, screaming headlines. All the experts telling you, look, the future looks dim because of the coronavirus, right? So you're sitting at home or in your car or wherever you are listening to our podcast and saying, Tom, what do I do now? And the answer, you already know the answer because Don's done a great job talking about it all week. I'm going to quote the late, great John Bogle, because John Bogle, the founder of Vanguard, would say, in times like this, you stand up and do nothing. And let's talk about why. Two reasons I think you should think about. One is because your portfolio is really about you. We'll spend some time on that. And a little perspective, bigger picture. As I say, we're about 2 months into the year. The first part, your portfolio. Now, your portfolio, as you know, should be designed for your need for return. If you don't need to make any money and you don't feel like watching stocks go up and down, you could buy a nice CD for a fairly low interest rate, but you could be there. If you're able to handle some volatility, and you should know that, we give you a free risk quiz at talkingrealmoney.com or vestry.com. You can find out sort of who you are about money. But your portfolio is designed for you, for your ability to take that risk, for your need for return, and how long until you need the money. It has nothing to do with recent crises or politics or the economy. That's the stuff going by in the background, because next week it could be something completely different. We don't know. Your portfolio is about you. It's not about current events. Number two, stocks, frankly, are a long-term investment, as are bonds, but stocks more so because they're more volatile. There are going to be periods where stocks go way down because the future looks horrible for whatever reason. Economies are bad. Companies are struggling. Stocks are a long-term investment. And yes, stocks do require you to be optimistic about the future because you believe companies are going to be profitable. You believe that economies are going to continue to grow. But let's give you a little perspective about all this, okay? Because since the beginning of the year, 2020, the Standard & Poor's 500, and by the way, this is as of Friday morning, so don't call me and tell me, look, you missed your numbers. The Standard & Poor's 500, those 500 large, greatly trusted U.S. companies, the biggest and best, have lost 3.2%. 3.2%. But if you're globally invested, it's been far tougher, as someone pointed out to me yesterday. The 100% global equity portfolio, that's lost 8.8%. But let's assume that not all your money's in stocks because very few of you do have all your money in stocks. If you do, got to be prepared at some point for a decline of 50% because that's what happened in the past. But if you're in a moderate portfolio, 60% stocks, 40% bonds, you're down 5.2%. And if you're even a little more conservative, 40% stocks, 60% bonds, 3.4%. Take a deep breath. And how about those bonds? The Vanguard Total Bond Fund is up 3.2% year to date. And Dimensional's Intermediate Term Bond Fund up 2.8%. So when you really step, and that's part of my struggle when the people talk about the stock market's done this, very few people have all of their money in stocks. Again, if you're in a balanced portfolio, you've lost a little over 5%. That is not a huge deal. Step back. You could stand up, don't do anything, take a deep breath, and have a little perspective about your portfolio and the expected returns into the future. I'm Tom Cock.
Talking real money.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only.
Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times.
Also, as much as you want it, no one can accurately and consistently predict the future.
So past performance doesn't tell you a darn thing about what the future will bring.
Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities.
Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor.
Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures.
That should keep the lawyers happy.